All right, of course, a lot of people watching Wall Street's opening bell this morning. Yesterday, yeah, not good. Saw another volatile day of trading with stocks finishing in the red. The Dow Jones actually closed 478 points down.
Well, investors are worried about tariffs leading to more inflation. We're hearing the word recession more and more.
Nope.
Joining us right now with a look at the markets and what it could mean for your savings and retirements account is Paul LaMonica, senior markets writer at Barron. It's nice to have you here.
Thank you.
So, listen, I've been through a few recessions up and down, over and out. I mean, it doesn't make this time any better. Is this any different than what we've seen over the last few years?
Yeah, I mean, obviously, anytime you worry about a recession, usually the causes are different. We had the pandemic in 2020, the banking crisis in 2008. Right now, Rosanna, I think the hope is that even though the economy is slowing, and we've seen that with some of the recent jobs numbers, we're not necessarily hearing recession alarm bells yet. If there are going to be continued worries about that, we'll see that in the coming months with more jobs data and also inflation numbers. There's a key inflation report coming out in about 20 minutes.
Right.
Wall Street and consumers are going to be anxiously awaiting to see whether or not the level of price increases is finally starting to cool off.
Can we be surprised with that? I mean, listen, we live in New York City, and things are very expensive here.
Yeah.
We all know the price of eggs has
Yes.
gone up, and everything else has gone up. So should we be shocked if inflation's up?
I wouldn't necessarily be shocked per se, but I think the hope is that what the market is looking for is that there's just this gradual cooling of price increases. Prices are obviously still going up. The hope is just that they're not going up so rapidly that the Federal Reserve has to worry about what do we do next? Do we cut rates? Do we raise interest rates? Usually you would be raising interest rates if you're worried about inflation, but with the jobs numbers and people talking about a recession, that's something where you would argue they should be lowering rates. And that's what they have been doing last year. They paused earlier this year, and they're expected to pause again when they meet next week. But the hopes are May, June, maybe they start cutting rates again.
So much of what we've seen recently obviously tied to the tariffs from the administration. Now we have this new possibility of tariffs on some of the exports in Europe and things like that. How much has that really rocked what we're seeing on Wall Street?
Yeah, I think all of this volatility of the past few weeks has really been about tariffs and the quote-unquote trade war. A lot of people...
Is it a trade war at this point? I mean,
maybe that's overstating it a little bit, but you are seeing some retaliatory tariffs being put into place, China in particular. So maybe it's a trade skirmish as opposed to like a full-blown in-the-trenches war. But remember, the big hope after the election was we're going to get the animal spirits back on Wall Street because we're going to have lower taxes for businesses and consumers. We're going to have deregulation of a lot of industries that have been stuck with all this red tape. And that's probably still coming. But for whatever reason, this administration and Congress have clearly prioritized tariffs and equalizing global trade over stimulus. So a lot of people I've talked to, they've said that basically, like, we're getting the vegetable portion of the dinner from this administration. Dessert's coming, but probably not until the second half of the year.
The president said it might be a couple, who knows how long, for a reset. Could be uncomfortable for a little while. I think that's what we're seeing now. But if I'm an investor or got a 401k and I'm in my 40s, I'm in my 30s, or maybe I'm a little older, I'm worried. I'm looking at that. I mean, how worried should I be? Do I need to start moving things around in my portfolio?
I wouldn't do that. It's understandable to be anxious. A lot of people talk about how there are two prevailing emotions on Wall Street, fear and greed. We've clearly entered the fear zone right now. But if you are a longer-term investor, if you're saving for retirement or a kid's college through a 529 plan and you don't need that money right now, maybe you look at your portfolio and say, hey, maybe I don't need all of these risky tech stocks that got pushed up by the artificial intelligence hype. But you don't want to sell everything. You just want to tinker. So if you are a little bit closer to retirement, you want dividend stocks that give you steady income. You want bonds that also give you that income. But if you're in your 20s, 30s, 40s, and you have a quote-unquote growth sort of portfolio heavy on U.S. stocks that should do well if the economy continues to do a decent clip, which I think it will, despite this turmoil right now, you don't probably want to make any major moves. You'll regret that. If you sold in 2000, 2008, 2020 and went into cash, you missed out on all of the rebounds that took place fairly quickly, even though those recessions and bear markets can feel like they last forever.
All right, so this is not going to be the crash of like 1929 or 87, right?
No, there are things in place now at the stock exchange where you have minimal losses on a daily basis. Yes, stocks can go down. They can go down dramatically. And if you, again, look at your 401k, it may feel very painful, but there are safeguards in place that should prevent that kind of massive, everyone heading for the exits at once, panic sort of selling.
All right, we're going to be good. Paul LaMonica, right?
Yeah, I just want to ask one thing.
Yeah.
Just one thing here.
He's still nervous.
I got a question. I got a question, and we have to be quick.
Is this personal?
Not really.
Okay.
Tesla stock was on fire for so long, and it's come down so much, but it seems like there's so much potential. Is that one that you're looking at? Maybe you buy the dip, or what are you seeing there? Is there too much volatility with Elon Musk?
Tesla is a tough one because even before what's happened in the past couple of months with him being at the White House all the time, he always has been a polarizing figure, and it's a volatile stock because Musk has a lot of balls in the air that he's juggling between Tesla and SpaceX and so many other things. X, the former Twitter. One criticism that some investors have had is that he's never prioritized Tesla. His counter, obviously, would be, he is someone who focuses on a lot of different things, but he has his priorities set on Tesla. I think right now the worry is that maybe the priorities are elsewhere.
All right, listen, Paul, don't give him any stock tips, okay?
You got to be
what
careful.
Is this? You looking to buy something while we're on the air?
I'm looking right here. Just want to be sure.
By the way, futures are up right now.
They are up.
Fingers crossed.
Fingers crossed with that inflation report coming out at 8:30.
We'll find you at Barron's, right?
Yes, thank you so much.
Paul
Appreciate it, Rosanna.
LaMonica.
Thanks.
Paul,
All right.
appreciate that.